From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, with the people. Floki, together, there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from London on this glorious Monday, not in terms of weather, but certainly in terms of the markets. So a big shout out to all of you who are watching this live today. See a lot of familiar faces and some new ones as well in the chat already, which is fantastic. And obviously a big shout out equally to people that are going to be watching this on catch up. So just a couple of good mornings to some good old friends and some new people as well. 2P, good morning. Fantastic to see you on here as well. Medio Mundo Marketing, brilliant name, love that. Hans, my good friend. Gio, mate, how are you doing? Craigie boy, everybody's starting to stack up. Our lovely Erica as well. How absolutely fantastic. And we found our very wonderful Kelly Barker last week as well, which was just glorious. Nit is here as well. Obviously, whack through the door. Julian as well. We've really got everyone, and we really do have a lot of viewers on here today, guys. So big shout out and a big welcome to everybody. For anybody that's new to the channel, first of all, behave yourselves, right? Everybody's here to learn, get on. We've got a fantastic group of people. Don't be afraid to ask questions. There aren't any stupid questions. Simon, good morning, mate. So let's not mess about. Let's look at the charts. I want to do a couple of things with you today. So good friend of ours and of the Bird Nest, Cyboro, has asked in the chat this morning to take a look at ETH USDT, something I don't actually cover tons, and I really, really should do. We're going to take a look at Bitcoin, just going to look at this update at the moment. I want to carry you guys on from my Sunday night report. So I write the Sunday Bitcoin report for the Bird Nest. You can get access to that completely for free. You can get through all the bits and pieces, the link in the description down there. Each of the analysts releases a report every single day. We cover the legacy markets. We cover Bitcoin as well. So please do pick up on that, because you can get some really, really, really good insights, right? So without boring you with it too much, and this isn't about hindsight, this isn't about saying, oh, look at what we've done, blah, blah, blah. It's doing it so that we can process it, we can put it into tradable systems, and then we can learn. So let's make this full screen. And let's crack on. If you've got any questions, guys, please don't hesitate to ask. And I thought that we would kind of lean our focus today towards liquidity. And what do I mean by that? So on every Monday, we try and roll out a kind of educational series where we look at different areas, topics, things that you guys are maybe struggling with. And we've had a really, really good flow going with that. We've been looking at external to internal liquidity. We've been looking at ranges. We've been looking about how we can utilize premium and discount. Now, a lot of these concepts that I discuss are from a very early mentorship I did years ago with the chap called ICT, or Michael. So that's a lot of the concepts come from that. A lot of the other concepts I learned over the years are based very heavily from people like SC, Crypto Bird as well. So if you do have any questions, guys, please do ask. But also I always suggest, as with our courses at the Nest, as with studying anything of Michael's through ICT or with Trader SC, these guys do go to the source and check these people out. I don't have an affiliation with them. I was very lucky to be mentored by them and learn from them, which was a huge part in my development. So again, for those questions of it, how I've used it in the markets over the years to build the career that I have, and hopefully it's something that can be of interest. So before jabbering on any more, let's just take a very quick look at this. The reason I wanted to update you on this was, in the Bitcoin report last night, I said we're basically facing two situations at the moment. Right, we're going to take a look at the highest timeframes or the higher timeframes shortly. I'm going to focus at the moment on the daily, just so that you can see where this says start of daily liquidity cluster. What I want you to see is over here, right? So when you look at this, I call it a liquidity cluster. It's not, if you study it under ICT, he would call it LR, low resistance liquidity run. But basically, something I wanted to draw your attention to today, and with our principles of liquidity, right, is when you're looking at any chart, when you see liquidity start to stack, right? And what I mean by that is we're looking at untapped highs. Yeah, so in this situation here, you see this move down, right? We've got the untapped highs here, right? You know, I'm not going to go in and do all of them. Well, actually, I will, just to really kind of show that this kind of area here is this big kind of liquidity pocket, right? Now, what else did we have a very similar situation of, right? You see these stacking here, right? And what happened is then when we got to a key point of resistance, as we got to here, price likes to come down and attack this liquidity, right? It stops resting here, stops resting here, stops resting here, so on and so forth, right? So let me clean that up so it doesn't look so much like a child's plaything. But you get the principle, right? When we're leaving this, when price starts to run hot and wants to go after liquidity, these are great areas to attack. So this line here represents the first of this cluster of highs, right? This dotted line, which we'll go back to in a minute, is a weekly level. Now, sometimes when you're looking at such a large area like this that can be attacked and price going up, then I like to zoom out even further, which is then when we'll take a very quick look at the weekly. And this then helps us get our real kind of high time frame viewing, okay? So we can see here, this is the kind of swing high that separates this one and this one here. What's significant about this, for me as well, is that this is an intermediate term high. Mark, no audio. Oh, okay, I don't know if maybe might be a setting on your YouTube. Can everybody else hear me okay? Unless we've had some kind of I've had this before, Mark. It might be on YouTube, mate, or on Twitter. It might just be with you've opened it. It might have said it on the mute. Turn my microphone off. Hopefully you get it sorted, bud. Thanks for the confirmation, guys, as well. Rob, Hans, everyone. Perfect. Thank you very much. So weekly levels here, which is the dotted line. Start of the liquidity cluster here, which has been attacked, right? So we've had that strong move up. Now let's just look at something for a moment, yeah? So when you come onto here, when we're looking at these strong downtrends on any time frame, right? But price is fractal, so we can overlay this on different time frames. When we're seeing these large-bodied down close candles here, yeah? Then what we're doing is we're looking at those as continuation. Same way that when we have this nice uptrend here, we can see these, we can see the larger bodies pushing up, showing the volume. We can overlay that with other market techniques then, like something like this, for example, where we take our bearish fair value gap. So we've taken external liquidity here. We've returned to internal liquidity here. We're in the constant flux of internal to external. That's the theory of liquidity, looking to attack old highs and old lows or rebalance fair value gaps. So this fair value gap, we expect it to reject price. It does so here. So what it's done is taken external liquidity, gone to internal, and then from internal, it's gone back and it's taken external, okay? So from external liquidity, we then expect it to draw back to internal, which is here. However, when we violate this, we close above this here, our expectation is for price to then move higher, okay? In this case, we can see that we've got another fair value gap above. What happens is price rebalances that, comes back into here, yeah? And then finds support on this, which is our inverse fair value gap. Now, you will see me use these methods as we move down through different time frames, all right? So don't worry if that kind of was a little bit over your head if you're new for it. I will take time to explain it a little bit more, but at the same time, if you are interested in stuff like this, I go over it on most of my sessions, which you can look back on our YouTube channel, on the Burb Nest, BIRB, Burb Nest YouTube channel. If you go to live shows, you can see all of the live shows that I do, normally around about 2 a week. Ricardo Ruiz, my man, how you doing? Good to see you back on the stream, mate. So here we've gone and we've taken internal liquidity, yeah? Internal liquidity being this, so we've rebalanced, we've found support on this inverse fair value gap, and then we've pushed up to take external liquidity in the form of these equal highs, yeah? And then also this high up here, right? So that's giving us principles, giving us ideas, it's telling us how we can look and we can read candles, yeah? So keeping that in mind, before we go overly technical, we've got a very, very similar situation that played out here, right? What did we do? We took a low here. So external liquidity to internal. We drew up into here. Now we're searching for external again, and we actually couldn't come down to take this low. There was just too much buying pressure here. So we ended up taking the liquidity below these relative equal lows here. Then when we closed above here, our expectation was because we inversed this fair value gap, we were going to rebalance. We're going to start attacking this high because we've gone from internal to external. Because this internal has failed, our expectation is then for it to seek liquidity higher, right? Like we did previously when we were looking at it back here, right? When this fair value gap here failed and we closed above, we were looking for price to first of all rebalance this and then search for liquidity above these highs. So with that in mind, we can see that we're in a very, very bearish, very, very bullish state of delivery, okay? Now, this here would be a mitigation block or a prior consolidation, however you kind of look at it to cover the terminology. The way to think about this is this up close candle, yeah? As price moved lower, this would represent an order block. area or an area of mitigation, right? Meaning that when we come back to it, we expect a rejection because look, resistance, price sells off, resistance, price sells off, resistance, price sells off, takes a low, engages liquidity, strong enough to push through it. We now expect this area to offer support, right? Now, we didn't get a retest of it, which is absolutely fine, especially in cryptocurrency. We can see the markets move incredibly hot. So we said to ourselves, well, while we've been looking at this for weeks now, rebalancing the area of this fair value gap. Now, what gave us the indication that price was going to move higher was when price closed outside of it. Yes, it's a small close, right? But with a small close, what we're saying to ourselves is, well, we would normally look for the equilibrium of this, the fair value gap, right? Or any array like a fair value gap or an order block. We start to close above it like we did here. And just by an equilibrium, I just mean taking a Fibonacci from the high to the low of the fair value gap, right? Split this into our premium and discount. All right, and we're just interested in the 50% line. See how we reject here. Then when we close above, we then hold the 50% line. We can see as we're drawing down, and we see the absorption in the lower wicks. Yes, we have got some what we would call a nose on a candle like this, where the high on a bullish candle, this is the nose, and the low on a bearish candle. But this nose here, see the rejection coming down. This is where the bulls tried to advance to. They got pushed back down here. Tried to advance again, pushed back again. However, the volume in this body closes it above, and that's our indication that we can move higher. However, the safest indication is to wait for this, or especially this candle here, which we can see closes its body fully outside of this. Now, we took the prior weeks high, both of the liquidity above there. We've had this lovely corrective move, soaked up all of that, all the buyers stepped in, we got absorption, and ultimately price has now popped to our first target, okay, which was the start of the daily liquidity cluster. Now, that was just to kind of run over what my current thinking on the market is. Now, while that has played out, it gives us a really good opportunity to go a little bit more granular and look at what the methodology behind it was, okay? I like to do this with the Bitcoin reports because it gives me the chance to present my thesis on a Sunday evening, and then on a Monday and a Wednesday with you guys, we get to look over this and look over some of the other charts as well. But we will do a slightly deeper dive into ETH, so we'll clear the chart off completely. I'll do a top-down with you all from the weekly all the way through to executable timeframes and tell you the setups that I'll be looking to trade over the coming week. So, as we've come into here, we've got this daily fair value gap, right? So my report yesterday, I said what would be the ideal situation would be, on the 4 hour, which we'll look at in a moment, we can see this just above it for price to pull back towards this and continue higher. However, if we didn't get the pullback, then all we wanted to see was a 4 hour close above that. Mark, brilliant, mate. Glad you're back online. Yeah, browsers normally messing with my life as well, as some of the patrons on this site will tell you me swearing at Google Chrome on quite a regular basis. So that's where we are. We're driving up to here. Something else I wanted to cover with you guys, right, is when you're looking at these candles, then what you should look for is how the candle closes, right? So if we let's just take this current run, and what led us to believing that we could have, I can't blame TradingView now, Erica, because they sponsored me, so I need to cut back on my criticism of them. Although I do have to say, I'm always very, very honest with anybody that sponsors, as we are at the Nest as well, henceforth the reputation we have as a company. And when they endorsed us and the individual traders, they said, do you have any feedback for us? And I said, yeah, if you watch any of my streams, you might see that I'm slagging you off quite a lot for the recent updates and because it keeps... And they got in touch with me with an engineer and they just said, look, what is it that's wrong with it? What can we do to fix it? What can we do to make it better? So at least they are listening, but it's going to be really funny if any of them are able to watch the live stream. So I'm not apologising, though, because it's absolutely right. And I'm definitely not apologising to Chrome, who I'm sure will twitch out on me in its usual fashion as well. Right, so this is a really good point. We're going to take a little look at this today with Hans as well, which is why you have to be ultimately very, very cautious and really understand how money cycles through cryptocurrency, right? So as money's coming into Bitcoin, it's sucking it all up, right? So Bitcoin's then taking all the energy, all of the money out of the market. When Bitcoin starts to range, starts to go sideways a little bit, it tends to be that money then distributes into the lower cap projects, right? Not low, layer ones, etc., AI, but those little projects start to pop because because the risk profile goes up. You've got the big, safest bet in crypto, which is Bitcoin, the beta risk assets to that, which are your altcoins, then start to get prosperous moments when Bitcoin starts to range and people are speculating with the money going elsewhere. However, when Bitcoin then starts to get down, what you notice is things then start to get punished, okay? Because again, the same way, if there's weakness seen in Bitcoin, people want to remove that risk from the market, all right? And just very quickly, something that I mentioned at the end of all the reports as well is to always keep your eye on the DXY, yeah? So that's the dollar index. It's the dollar as a currency basket weighted against other currencies with a heavier focus on the euro. And what you'll notice here is bullish from the dollar and weakness in equity markets. Not always like this, but you can often look at that and you can see how that then affects risk markets, right? So basically, in traditional markets, we've got our equity markets, like our NASDAQ, our S&P 500, right? Or you'll hear them mentioned on the minis and the futures contract for the smaller contracts as ES and NQ, right? Now, if the dollar is running hot, equities, which are considered risk assets, are going to start getting hit typically. Bitcoin and crypto is a riskier risk asset, also known as a beta risk asset, which means that it typically gets hit even harder. So while we're seeing some hold on Bitcoin, what we're going to start to see as we go down into some of the alts, is we can start to see the sea of red, start to emerge. That's where we can look at it. Now, something else I want to share with you guys just before let me finish this and then I'll talk about the scanner and how you can use that on the website because it's completely free. Now, what we're doing here, Hans mentioned something earlier that caught my attention. I really liked it. So basically, look, I'm not going to go into this more detail. We'll save our analysis for ETH and we'll really pummel through that on the last half hour of the show. But just looking at this here, look at your candles, right? And then mark the prior days or the prior week's high, right? Razoon, my man. There he is. Guys, Razoon, I have the absolute pleasure of working with this wonderful human being and just exceptionally talented trader. Just an ever-present at the nest and just a magnificent price action trader with a beautiful use of volume and an unbelievable coder as well. Raz, can you do us a favour, mate, and pop your Twitter handle on there? Just for anybody that's interested in following Razoon, I'd highly recommend it. I get to meet with this guy every single day and we discuss charts, which is just an absolute joy. But as he's saying there, and we'll take a quick look at this in the moment, the NASDAQ monthly tells the story. And he's absolutely right when you look at that. He is exactly, Hans, an absolute legend in the house. An absolute legend. Just an absolute top guy. So we're going to take a look at that as well, right? So we're going to use that. And again, this is where you can get being in a community like the Bird Nest, right? And look, Bird Nest might not be for you, but there'll be somewhere out there that is. So I always recommend trying it. You can try us for free. You can get involved in deals and bits and pieces like that in the description, and you can get access to our calls for free, right? But find a group that has, professional traders, full-time traders that give you these insights and really, really help you learn. And here's Razoon's Twitter handle there. So it's at Razoon, ZZOORM. Yeah. Give this guy a follow. I think his short, little sped up videos that he does on price action are just some of the best things out there. And actually, I didn't see anyone doing that really before him. I think he started a major phase there. So well done, mate. So just quickly, I'll give you a few more minutes to write that down. Let's look at these. I'm just going to do these slightly longer, right? Now, let's look at what happens, right? We know we've got this one here. In fact, let me draw them across even more so they're even clearer, right? So when we're chopping around in here, let's have a look at what we see in here that we don't see back here, right? When we're looking at these highs, so we look at the prior day's high, in this case. And then when we mark this up, I'm going to just do it with this very crassly so that we can see, right? We closed above that high, meaning that this next day's open, we expect it to attack that high. Does that make sense? So what we can notice here, right, is price sets a high here. Yeah? So this high is set. This daily candle fails to take that high but runs the low, closing under this low, right? We can see that as a sign of weakness. And then what we can do is we can say to ourselves, okay, we've closed under this low, we're under here. So this day we'd be looking for price to open and then sweep the low, right? All of a sudden, we then take the high of this day but close above it. So our expectation for this day is then for us to attack this high, right? So what we can see here is that Closed above it, continuation. Closed above it, continuation. So with a strong close like this, considering that we also need to be aware, right, and we need to take a look. Mining, hello mate, good to see you. Noor, Ali Khan, welcome my friend. Actually, fun enough, we're just about to dive into ETH, which is going to be, we're going to do a nice top down on ETH, so hopefully that's got some value in there for you, mate. This is just something that I look for, right? I don't hold it as golden, right? Like nothing in trading is right, but it's something that I overlay when I'm looking. I'm saying to myself, do we have that strength for continuation? However, on the flip side of that, I'm also very, very cautious of, when we get these big runs, right? Now, not as large a run, no. But look, we had these, right? We started to come up, started to close these candles. Price starts to come up. We still had some uncertainty here, right? You can see by the kind of doji-like candles with long wicks to the top, long wicks to the bottom, right? However, what we want to do is when we find the swing low in here, which is this one, and we draw that up, we're looking at our principle of premium and discount, which is just, again, it's an ICT concept originally. We take it from the low. This is the displacement leg, or the current price leg from this swing low to this swing higher, meaning that we would favor short setups from this 50% and long setups from here. So all you do is you adjust this range as you move along until you set a new swing low, and then you breach a new swing high, okay? And the idea is that, if you're thinking about this in terms of supply and demand, and you're thinking about this in terms of risk to reward, it makes much more sense. If we're in bullish continuation here, it makes much more sense to look for longs down here than up here. Why? Because if we enter up here, our upside might be this higher, but realistically, our risk has to be below here. Yeah. So just for an example, if you'd aped into a trade up here, then you would have had to have your stop loss under here, this swing low, right? This one here, and I always go a few points lower. If you'd applied, no, you don't have to do that. That's a silly thing for me to say. It's not true. But technically, because it's the only place on this timescale you can identify where your risk is, where you're wrong, if price is running below this low, right? However, you have to then allow for liquidity, meaning that if we apply the same principle, then the first place that we could, reject from price would be here, meaning that we have a 0.64 risk to reward, which is awful. You never want to be trading anything under a 1-for-1. Ideally, you want at least a 1.5, right? Now, if we look at this in terms of saying, okay, well, once we get this high, as price starts to correct here, what we can do is we can look lower for areas, for fair value gaps, for order blocks, right? Now, this order block here was brilliant because it was, first of all, down in discount, the lower half of our 50% range, meaning this is a good area to go and hunt for long setups. It's simply the down close candles before price pushes up higher, okay? And then in here, it gives us the opportunity to look for setups. We did have a very, very small fair value gap here, right? But ultimately what happened was that wasn't down in discount, So while we can look for long setups here, and I still would, because when we're in bullish trends, you always want to be aware of these to a degree. You think to yourself, okay, but remember what I said, if we violate these and close below, normally our expectation is to search for liquidity lower. But why I wouldn't be so keen to do that here is two reasons. The close of the candle, look how bullishly that gets bought up. And where are we delivering from? We always have to ask ourselves that. We're delivering from this bullish order block, these down close candles. So as price comes into here, our high probability is for long setups, all right? So let me just clean this up for a moment. And we're going to run over these principles again, guys, when we go through ETH, right? We're just going to delete everything off the chart and we'll go completely top down. Now, I just want to finish off very quickly on here. So we're going to go back to our 4 hour. This is my interim target here, which is this level sat at 42,950. Strange how these often end up being sort of, round numbers, right? So like you said, if you look back through Bitcoin cycles and bits and pieces, especially in the early days, how it's so fun you get to those round numbers or, numbers that the people can associate with, and that's where people typically set. Bonjorino, Florida's Emerald Coast. Kokadagi. Hello, my friend. Apologies if I've absolutely butchered your name there. It sounds like a wonderful name, but unfortunately, we Brits aren't the greatest with that. Very, very lazy nation, typically, when it comes to languages, which is a shame. But before I digress anymore, let's just remove these for a second. We can see at the moment we had this nice play here, right? We've got our close above here, a bit too early for me to trade it. Unfortunately, this happened. here. So this would have been tradable at 4 o'clock in the morning. I did say our early entry opportunity is if we close above the prior day's high. But would I have taken it? No, purely because we got the start of the liquidity cluster here. We could have easily seen a correction down to this fair value gap. My thesis, as I released in the Bitcoin report last night, was if we close above here, we expect more upside. If we were to reject here, so after that rejection, if we got another one here and then down to this, well enough. Thank you, mate. I'll absolutely take that. I'm consistently butchering poor people's names on here. But just very quickly, let me show you how you could get involved with this if you are somebody that trades Asia, right? So let's just think about what we've done. We've looked at a weekly time frame, a daily time frame. We've given ourselves a set of parameters that we have to meet. So what we've said is we get this strong close here, meaning a high volume body close above our key level, showing us that the market wants to seek liquidity higher. We've ascertained our higher target here. Do we need to wait for price to get all the way there? Absolutely not, right? So a few things will happen. And what I'm looking for here is when we set these moves in motion, we want to get our liquidity targets in place, which is our 4-hour fair value gap here and our 4-hour fair value gap here as well. Okay, so these are the areas we want to see. If price takes a high, we want to see price correct down to this and then find support and move higher. Yeah, so that's the current theory. That's the current thesis. Now, what we also need to look for is if we're looking at this on the lower time frames, is how we could have got involved at 4 o'clock this morning UTC, or if we were trading Asia. So the first thing I like to do is go down to an hourly chart. I'm going to put my session breaks back on. I have these every day when I'm trading. I just take them off to share charts. It's simply the little lines that depict the breaks between the day. This is an indicator that I've got here that shows me when the trading sessions are. This is London, New York AM and New York PM. These are my favoured trading slots, especially New York AM. However, we can see in London this morning, we were here, but actually it was 4 o'clock that we got the opportunity. Now, let me just remove this quickly because that wasn't obviously there when we were trading at that time. But down onto the hourly, I'm saying to myself, okay, what's price doing? Is there anywhere that I can look for this to be set for continuation? And actually, we can see we're just in a series here of bullish candles. So we had an opportunity to get involved a little bit later on when price set this fair value gap on the hourly. Yeah, and we got a buying opportunity here at 7 o'clock this morning, and we got another opportunity in here about 11, right? Now, I didn't want to take this here. I don't typically trade London, and I certainly don't trade London on a Monday morning. I like to see how the traditional markets pan out. But let me show you what we would be looking for here. And actually, I'll get rid of this again, just because we wouldn't have had that at the time. We're looking at this candle here, this big expansion. And if we were trading it during Asia, right? So a couple of ways that you can look at this. Now, let me actually start on a 15-minute, because I know a lot of you won't trade as low as sort of like a 5 and a 1 minute chart, which is typically the areas that I kind of specialize in. But I do a lot of trading on this as well. Imran Khan, my friend, how are you, mate? How are you? And thank you very much. If you are enjoying the content, guys, do just hit the likes for me. It does help with the Twitter and YouTube algorithms in terms of kind of making sure we're getting the content to the right people. So let's take a look at this. We were saying 4 a.m., right? So 4 a.m. is here. Let's just put a line on 4 a.m. We're going to overlay these principles in a moment on ETH and look for some setups that we can roll into this afternoon. So what we can see here is we've had price come up and take this high. We had this consolidation. Yeah. Now, I like to see price close above the wick of these. Now, I'm making much more of an allowance for the body in terms of it being a tradable area. So let me give that a bit more context, actually, because that's a bit waffly. So what I'm doing is when I've got my high time frame bias aligned, when I get to my trigger point, which for me is these trading sessions here, but we're saying if we were trading Asia, yeah, Sebster, hello, mate. Great to see you. Had the pleasure of meeting Seb. In Paris, I think it was, wasn't it, Seb? I think we met, or maybe London at Token 2049. Again, showing the power of networking. We always try and take some competition winners down there with us as well, or people go down under their own volition to go and meet people. And it's a great way to network, great way to meet people. So here's our go time, Asia session. What am I looking for? The reason I've highlighted this order block, and for me with order blocks, unless they're followed immediately by a fair value gap, I'm taking the top line of this, so the down close candles. I'm adjoining for both of them, but then I allow for the bottom of the wick. If I'm looking for a bearish order block, which is an up close candle, yeah, then what I need to do is I need to do it the other way around. I'm taking the flat of the bottom to the top of the wick. But because this is bearish, yeah, what have we got? We've got a bearish candle, but it's a bullish order block. So the bearish candles, we want to take the top of it because we're now expecting this to be used as support. The other thing that I would be conscious of here as well is I'm looking also for fair value gaps, right? So if I'm looking at this again as an expansion leg higher, right, I'm taking my Fibonacci, I'm saying, okay, there's the low to the high here. I'm looking for any fair value gaps that are down in here that give me the maximum risk to reward. But like I said earlier, we're also monitoring the key areas within order blocks, yeah, or if we had other fair value gaps here, purely because, and especially with cryptocurrency, price can run incredibly hot, meaning that we don't always get the deepest of corrections. However, we monitor this one. If we don't get the setup there, then we monitor that one. Price runs away and we don't get an entry, we never, ever chase price, okay? So we've identified our area of opportunity for entry. Now we can take it down to a lower time frame and look for our opportunity to go in. So, like most of the opportunities that we have, like I say to people, there's different ways that we can enter. But realistically, there's a few that I really, really like for crypto, right? So we have the breaker, which is the upcand in this situation before we run price. But what I always like to see is some kind of liquidity run, meaning that we've engaged the stop losses, generated some liquidity. So anybody that was along here that had their stop loss under this low gets taken out here. It generates some sell orders that can be filled with buy orders. Then when we get the break of structure here, that's when we can enter, and that's when it's go time. All right. Now, with crypto, especially recently, and completely full disclosure, there's a number of different ways that I use. I really like to see retracements back to fair value gaps, right? But actually, especially in very bullish market conditions or overly bearish market conditions, you don't get them. You get these really, really big drops, leaving these inefficiencies. So something that I do quite a lot is, as I was doing before, I wait for a close above. Yeah. I know where I'm wrong because my stop loss is under these lows down here, right? Now, ultimately, I'm not expecting price to do this necessarily in one move, but this dotted line up here is our high time frame target. So this would be the entry that I would take, and I would be managing the trade up to here. I would then be looking left at other areas for confluence to say where I can start to take profits, because I'd want to move. I'd want to be taking some profit in and around this area, aligning that with a previous historical high. And then I can look here to trim, move my stops to entry, meaning that I then de-risk the trade completely. So you can do something like this, for example, and look at the close. So like I've done here, I've got, this is purely based on market structure. We've swept the low. We're engaging with our high time frame PD array. When I get the close above here, I need to see displacement. I want to see a fair value gap here, yeah, to show that the market's moving quickly and the buyers are stepping in. And then I want to see a candle close above here. And I've got these two beautiful big bullish candles close above here, right? I can take a speculative entry here on the fact that we've got these two because the fair value gap is confirmed on the close of this candle. Yeah, and then I could also take a confirmation entry here. If price dipped lower, I can use that as an opportunity to add to my position. But to do that, I'd need to make sure that I'm going in with a reduced lot size to begin with. So, for example, I take an initial position here, right? And then should price correct back down to the fair value gap, which is here, yeah, then I can have a limit order waiting down there, in which case I would then, look to trade that to the same position. But ultimately what happens when we do that is we bring our average order price down to kind of halfway between the two. Yeah. So I hope that makes sense. That's how you can kind of, you can take multiple entries. I think a lot of people say to me, and I agree, they're like, Christ, you know what? I just missed this move because price just ran away, never returned to my entry, never returned to the limit order that I placed on here, for example, which is a system traded very successfully for a number of years. I used to call it a breaker line. It's purely overlaying the same principles we've done there, except looking at the market structure shift or the break line here. Then you wait for a close above it, you set a limit order on it, and it pulls back. However, as you can see here, we wouldn't have quite got filled on this one. And you can see that quite often with highly volatile assets like this. Okay, so we can see at the moment we're in this kind of corrective phase. So let's take a look at ETH and let's just overlay everything that we've discussed there from a top-down perspective. While I take a sip of tea, did anybody have any questions on what we've covered so far? Silence normally means one of three things. One, everybody's fastidiously taking notes, which is awesome. I love that. Two, Chrome has destroyed me again and taken me offline. or 3, everybody's a little bit confused. Yeah, mining, awesome. I'm really, really good. I'm a very simple creature, mining. I spent a long time in the markets trying to decant it down to a way that really makes a lot of sense to me. Um, and yeah, I'm really glad. I really hope that that's something that resonates with you guys. So let's just hide all of this jazz for a second. Put that into recent. Let's get ourselves onto a higher time frame, and let's just go top down. Yeah, so great point here. Great point here as well from Hans as well. And I will get back to the other points on there. Just DXY. What did we say at the beginning of the stream? Keep an eye on the DXY. What were we at the time? Yeah, look, DXY up another percentage point here. It's pushing up at the moment, meaning that we look at that as the way that money is running into is a run to safety, a flight to safety, right? So the risk assets typically get hurt, and we can see that when we look at the reflection on Nasdaq and the S&P 500 today. All right, so Bitcoin, other cryptocurrencies, obviously as beta risk assets, can be very, very exposed to this. We can see it with the big upside wick that we can see here on ETH. So let's start with a weekly. And actually, let me just go on that. Go on mining, brilliant. Nit, yeah, bearing in mind this example, the opportunity gets says, how would you take the next without chase? Sorry, mate, it was behind. Is the question still relevant, Nit? Did you want me to cover that again? If you do, mate, please do ask, and we'll make time to have a good old look. So, weekly scale, right? I'm zooming out, and in fact, you know what? There's not the biggest day, but monthly as well. So, we're looking for highs and lows to draw price, right, for the liquidity that's resting below them, or for these fair value gaps as well. And what we can see here is this big fair value gap here. So the gap, for anybody that doesn't know, you can find it on my Twitter and definitely on the YouTube as well, about fair value gaps. But basically, it's when you have a 3 candle pattern, 1, 2, 3, and you have a gap between the wicks of candle 1 and candle 3. Are you sure, mate? No, never apologise, mate. Never apologise. Always rather you be asking good questions, my friend. So, yeah, basically, we're looking at this here. Price, these act as a draw on price. We can see it drew price up here, yeah? So, remember what we're talking about again, yeah? Price has taken external liquidity here below these lows. It's drawn back up here to internal, which is the fair value gap. Price then draws back down towards external liquidity. Doesn't come down to take this, but takes the prior month's low here, sorry. So that's come in, that failed to sweep the prior month's low before that. It's taken that liquidity. Then we've had this corrective move, right? Price is then drawn back towards the fair value again. Awesome, Whack. Brilliant. I mean, you're a very good chartist, Whack. You know, I've seen you in action, mate. You know what you're doing. So price comes up, down, drawn back to this again, right? Ultimately, what are we saying? External to internal, internal to external, right? And we can see on a monthly scale, we're building this bullish momentum because we really failed to take this or really get anywhere near this external. Now, this is applicable on all time frames. I don't personally trade the time frames this high, right? I'm looking at this much more on a weekly, in truth, much more on a daily. That's so true as well, Erica. So 64, yeah. So we got 66 people online with this at the moment through YouTube. I think we've got about another couple of hundred that are watching on Twitter as well, which is really, really awesome. Obviously, lots of love and appreciation for all of you. Hope you find the content useful. Yeah, exactly. Yeah, signs of a bull. I don't ever want to call that because people always take the piss and say that whenever I get bullish, that it's normally a top sign. It's not. It's just that when I came away from trading privately and doing this without a Twitter profile and came into it, I was very, very vocal through and very, very active through bear markets. So I got known as one of these people that they call a perma bear, which just simply isn't true. But when it's time to be bearish, it's time to be bearish. And at the moment, it's time to be bullish, right? So what have we got? We are here. We've got this fair value gap. Price is drawing back up to it on a monthly scale. This is the current draw, right? Now, where do we need to be cautious? And again, this isn't to put anybody off, but if we're making an allowance for the current dealing range down here, so even if we're taking it as our displacement, okay, so we can see quite clearly here this whole area been favoring long setups, right? Since we came and closed this up close candle here. Why? Because that's really, when you're on these kind of time frames, the best way to look at to look at when you can stop. Because people say, I'll take this high to this low. Well, how do you know? For me, you either want to have a high to be confirmed by sweeping liquidity above another high, in which case, if we were looking at this as a dealing range, our dealing range would actually be higher. It would be this high down to this low, right? And this is what I really want to focus on here. So this is our current price leg, because swing high to swing low, right? And we're coming down into this. So we want to be aware of that. So that's that high to that low, right? And we can see at the moment that we are right on the equilibrium of that, right? We're literally just starting to peak up. So again, we could see price just have this little correction down here, come and fill this fair value gap if it makes one before pushing up further. But in terms of the dealing range, which is this high, to this low, I like this. And I'm saying to myself, okay, well, where's price targeting them? Well, we've got these up close candles here, sat in this area, right? We also have two other key areas that can provide a target for us here, which is that high, and also this very skinny fair value gap, which rejected price here. So that's where we're looking on a monthly scale. I think we've got more upside to go here. I do. But we are currently delivering from this bearish fair value gap. We get a monthly close above this, and I think it's just go time for these highs as a minimum, which are about 3,581. Right now, I don't make price predictions. That's where I'm looking for liquidity. I'm not going to say that we're going to get to a 10 grand fucking ETH or whatever. Pardon my French. But you need to appreciate when people do make these predictions, they're based on solid models that are tested. If anybody knew where the market was actually going, there wouldn't be a market because there'd be no money in it. So we're going to get rid of this, and then we're going to drop down to our weekly, guys. All right. If you've got any questions, if any of this if I'm talking too fast through it or it's not really making sense, please do let me know. So now what I do is I like keeping that month's time frame on here, right, so that I can see how price is kind of engaging with it. I don't like keeping too much of it on there. I do remove it when I typically trade because I do like to see a clean chart. But what's the kind of standout thing on here, right? If we're looking at this in the same principle, is first of all, we're looking for the fair value gap, which is here. So this is the daily fair value, the weekly within the monthly, right? We've got this one and we've got this one slightly above it here. So this is proving the draw on price at the moment. And we can see that, right? Price getting closer here as it's driving into it. So again, we can do things here as well, like monitor the equilibrium of this. Right, so we'll draw that in, make that a little bit less obtrusive. And we know that dotted line, there's the equilibrium. If we start to get a weekly close above that, I think it's go time back to this fair value gap, right? Again, however, we're not just going to take that as golden. We're going to overlay other principles. So what else have we done that has significance is this. This is so significant for me, was the close above this, right? This high here, rejection. It doesn't have to touch it, because at the end of the day, we could be looking at the wick area here, right? And this is why you'll see some people, SZ is a great exponent of this, right? They aren't magic lines on a chart, guys. They are normally areas, right? So you can make an allowance as long as wicks to the bodies. But I always mark on the lines as the top line because I'm looking for where liquidity is getting run. But you can see as price dips into this area, the red area, 3 times we see these rejections, the long wicks to the upside, showing that the sellers are stepping in. And like Hans says here as well, 2,200 is a nice area that you want to hold to if you're looking at it from a level perspective, right? But this close above here, this keeps me bullish, However, we do still need to look at our principle and say, okay, well, what if we do reject from here and come down? Where am I looking at? Well, the first place I'm looking at is this weekly order block on this scale. Right, so what I'm going to do now is I'm going to get rid of the monthly because we know where we are on that monthly scale. And clean that up there. We're going to leave our line on and we're saying to ourselves, okay, the picture's starting to come together. So now what are we going to do on a daily? So if we take this and we look at our current, now we would want to close we would want to have a down close candle here to really confirm this. But what we can see here, if we look at this in terms of our premium and discount, is the price is kind of delivering us this beautiful fair value gap right on the line of support here. So what would be really nice, in my opinion anyway, is getting to this kind of area here. So we have this Then we see a rejection down to here, yeah. And then we just want to see on the lower time frame something like this pattern. And then we would look for something like this, okay? Now, the reason this isn't just a random bunch of scraggly lines, the reason for this is we want to see price find support here and build a base. We then want to see price run a low, which would be representative of this low here. Yeah. And then we would want to see it close above the high that ran that low. So there's the high, close above there with displacement in here, and then we can look for a nice kind of fair value gap entry in here. If you were looking for this on a daily, what you would then do is drop down to say like an hourly to look for this pattern. Yeah. What I'm going to do is we're going to decant this down a little bit further, and we're going to go down to a executable time frame that's down in the minutes. All right. So from the daily here, we can then move to our 4 hour and say, okay, well, if this is the daily, so FVGD to show that that's our daily. Price starts to correct down, then our expectation is for it to come back down towards here. Cheers, hands. Always great having you guys on the stream. Let me just have a quick look through the comments, just making sure we've not missed anybody's. No, awesome. Let's have a look. Only future whales here. Love that attitude, Simon. Wicked. Lovely. Okay, guys. So now these lines that have come onto the screen again, just to reiterate, they are our session breaks. Now, it can be difficult, right, when price is running hot like this. So what you can look for are the down close candles to support price higher. Yeah. So what I like to do with these is I mark the body here, like I said, right? I normally do them with a black line like this, right? Typically when I do the streams, I'll show them as I have been like this. So I'll keep that so we've got that consistency. Okay, so this was our order block in here. When we close above it here, same kind of principle, we get our strong close above it. And actually, if you want to be super safe, and I am quite often, I'm normally allowing for the wick as well. So we can see we get the close here. We get this definite close here. Then when price comes into this, don't forget to watch what the candles are doing, yeah? Price comes down, steps in. You see that long tail wick that's building up there? Very contrasting to all of the long up wicks here, yeah? So we see selling pressure, sell, less selling, start to see the buying, closed above the order block, stepping into our New York session right in time for our expansion higher on Saturday, okay? So similar situation here. Didn't quite give us about as much of a heads up, but still plenty. If we were allowing for the body, we would have been interested here. Like I say, remain consistent, right? Don't change your methodology to kind of suit what the chart says. Otherwise, you'll never find consistency. So for me, I do like to see the close above the wick as well, as long as it's not a ridiculous wick. But look, we get the close here and people will say, yeah, but you've missed the move at that point. Well, you haven't. As long as you've got your upside targets, we know we're aiming for this. All I need to do is grab myself a slice of action in here, right? So let's have a look at that. We were on, well, actually, let me just show you, just to show that we're not obviously just making this up. Here we go, 20, and so 8 o'clock, right, is then when we got the close above it. So that meant at midnight, we were looking for the run. Again, if we were trading Asia, I didn't trade this. I did not take this trade. It's not within my trading times. Right, so here's our midnight line. This could not have been any sweeter, actually. This is one of my favorite setups. So when we see an inverse fair value gap, right, so this obviously normally would be, this is first of all a bearish fair value. You expect rejection. When we close above it here, you're so often, and like above 80%, you go and attack the highs here. And the brilliant thing about this setup as well is, and again, we'd enter this on a lower time frame, is that when we get to here, yeah, so our entry's on the close of this candle, if we were trading on a 15-minute, yeah, so you would wait for the close above that. You've also got the knowledge of knowing that you are delivering from a bullish fair value gap in here. So delivering from a bullish FVG, violating a bearish FVG, making it an inverse. And then we want to see a 1-to-1 to our target here. And if you're super risk averse like me, you can even start moving your stops to entry when you hit this first internal high, okay? Yeah, I mean, that was just a thing of beauty. So overlaying the same principles now, let's see what we're doing, right? So we had the same setup here in London. Now, This is why sometimes with this setup, it's good, it pays dividends to be risk averse. Because once we hit that higher, so we would have been in here, right? And then our stops were here. Now, knowing that if we want to move our stops back to entry here, we ideally want a 1-for-1. We've got a 0.4. If you're trading equity market, stuff like that, Forex, you can sometimes get away with that, especially if you're market ordering. But you do need to be careful and make sure you've got the risk to reward there, right? Because even if you were getting greedy and you say to yourself, well, I'll put my stop underneath the inverse fair value gap, because we shouldn't really be retesting that, and we didn't in this situation here. However, I do like to use swing highs and swing lows, but I will typically do this on a 5-minute chart. So for me, the risk reward wasn't there, because if we do reject here and we start to come slightly deeper, we have had a big expansion overnight, then it just doesn't make sense for me to take that trade. What does make more sense for me, especially as we're moving towards our trading session here within New York, is this. So this area right here, if we were trading this on this, and our focus was this time frame, right? Then this right here is our 15-minute fair value gap. Just working an equilibrium on here as well. Okay, so you can see rejected at the midline there again. So we start getting this close above, and all of a sudden I'm feeling like, hang on, we could come and take out this high. Why? Because if it's not respecting this, when price gets into this should be rejecting here, attacking these lows, and then forming another fair value gap and fulfilling that, until we get to the point that we inverse a fair value gap that should be, so here would have been a bearish fair value gap, for example. Yeah. Then when we inverse this, so bearish fair value gap here, rejects, resets, comes down, sets another bearish fair value gap. When we close above it, this bearish fair value gap becomes an inverse fair value gap. We look at this for support to move prices higher. If you go back historically on almost any time frame, you will be able to see these at the start and ends of most moves. If you then overlay this, as we do here with our trading sessions, here's our New York PM session. Here's a nice big fat bearish order block. We close above it here. We step into New York. What do? We leave this original high unviolated. Yeah? See how we haven't touched it when we close here? So we come above it. We've closed above it here. We're now looking for price to draw down into this. Why? Because there's a bullish fair value gap in there. And then on the low time frames, we can look to take a 1, 2, 3 minute entry in there. All right. So again, that means, just do that on the high time frames as well. Pick a chart, pick a time frame, and just go and look for how many of these inverse fair value gaps at key levels are the kind of originator or the catalyst for a much bigger move. Emir, hello, mate. No apologies for being late. It's always a pleasure to have you guys on here. It is being recorded, guys, so remember you can come back onto this as well if you have any interest. So we've got that now. If we close above this, so again, remember the fair value gap or the time that you're looking at, you want to make sure the close is on the same time frame, right? So if we get this close above here, then, and a lot of people will say this, right? A lot of people say, well, yeah, okay, well, if we get the close above here, so we get our bullish close. I'm already starting to feel a little bit bullish in 5 minutes if we close above the equilibrium of here. Is that enough for me to go long? Absolutely not. But as long as we close above this, right, but don't take this high, then I can get onto a low time frame, like a minute chart, right? And again, from the close here, what am I looking for? I'm looking for a price to just sweep a low. I try and do this tiny just to show that there's enough in there, right? But if it fits from a risk reward profile, this is probably a little bit too close, but let's just say we got an entry in here. Oh no, 54% with some leverage. You could definitely do that. You would just need to make sure that you had a reasonable risk profile for it, meaning more than a 1-for-1, ideally a 1.5 to 1. We could look for that to close. But all we would do is we're basically just overlaying these principles across different time frames. All right. So, guys, do we have any questions? Actually, I can see some. So let me move to some of the questions we've got in the chat here. Hasta la vista, Barbie. Hello, mate. Hope you're well. So it's a great question here from Nit as well. And Hans, I see yours there as well, mate. I'll smash into that in a second. What if we close above but doesn't sweep and keeps on going? So for me, quite simply, if we close above here and we take a runner onto there, right, there are, you can put running systems in place. So I can show you running systems, for example, if we look at this one. Yeah. So from here to here, I'll show you how we would set a runner on a 1 minute nit. It's not, I don't favour doing it very often, I have to admit. Let me just. And the reason for why is just because, I'm not somebody that likes to chase trades. Okay. However, on a 1 minute, what I would typically do if I'm looking to take a runner, so from here to here, in fact, let me put this on replay and just run you through this very quickly from the 15-minute down, because it is a very good question. I like to wait for the pullbacks to a degree because it gives us the best risk to reward, right? If, however, my risk profile allows for it, then I can take less than that. Right, so this is the candle here, right? This is the candle here. So this one closes above. So remember what our theory is here, right? We need to see this original high untapped. Yeah? When this candle closes above, our expectation is for the price to reach for the key high here, but also to be able to give us a risk profile that we can move our stops to entry and de-risk here if we want to. Now, we get the close above, which means that on the 1 minute chart, it's go time from here because our bearish fair value gap, this would have been expected to reject price. When we close above it, we're saying, okay, what's happened? Price has taken external liquidity, internal liquidity. We expect it to head for external, which is here. But at the same time, we're looking for this fair value gap to reject price if we're going to continue in any kind of bearish nature. Closing above it shows us strength, and we expect these to be attacked. However, we might be wrong. And this could be coming in fact, here to set a lower high and coming down. So what we want to do is price will normally get to our original target, our internal high or low, in this case, our high. So we're looking for price to push up to that. We get this close above it here, which means that now when we go to the low time frames, from the green arrow is our go time. And I'll show you the two types of trade entry that I would be looking for here. So green arrow is go time. I'm looking for two things, right? I'm looking for a structure shift. Yeah, so I want to see displacement above an interim high or low, right? So as we get it here, you can see price then just ultimately just fires up, meaning that we wouldn't be able to get ourselves in a position here. We take an internal liquidity, we would have got a second opportunity to enter on this fair value gap. Why? Because we take premium discount, from this displacement leg higher. Why is it displacement leg? Because it's got displacement in it, it's taken out higher. And then if we want to get a re-entry, what we want to see is price draw down into our fair value gap, which is down in premium, okay, which is here. Then we know where our risk is. It's under this order block here. Yeah, price comes in, tags us in, and ultimately goes higher. However, that obviously gave us a later opportunity. What NIT was alluding to was chasing trades, right? So if I want to chase something, this is my higher. I've now got the conviction that price is going for this. Why have I got that conviction? I've got pure conviction here because we've seen price inverse this fair value gap. On a 15-minute, we've got the close. Now, whenever we want to go for long setups, we want to see price pulling back, and then we want to use it to attack the highs. Craigie boy, thank you so much, mate. Craig always joins us as much as he can. What an absolute solid chap. And a very hard worker by the sound of it as well, and gives up his lunch hour to come and join us all. So thank you very much, Craig. Have a magical day, mate. And any questions, please do hit me up. So we're here, and Nick was saying, how would I chase this if I wasn't looking for a pullback? Yeah, because like he said, look, we get our bullish fair value gap here, but it just doesn't pull back for an entry. What I want to do is I want to cycle through these time frames here, and I want to find one that has a convincing fair value gap, a bearish fair value gap, and we're going to play the inverse. Right? So might not, I think if we've not got one there on the 2, we won't have one on a 3. Let's have a little quick look. What have we got? This one. So the reason you want to cycle through the time frames as price is watching this is as it's coming down, wait to see the biggest fair value gap that you can find that's really, really clean. There's a brilliant exponent of this chap called an ICT trader called Ryan, a DD, and he uses this to really, really great effect. But when we close above this, same way as we did with this, we've got a 15-minute close above this. Now I'm just purely overlaying the same principle, but this time on a 3-minute chart. We get the close above this here on our 1 minute, so we would mark it enter on the close of this. We know where we're wrong. We're wrong below this or below here. I wouldn't go as tight as going underneath this inverse, to be honest. But then here's my first target, 1.26. Yeah, so you'd come in here, you could chase this up to there, and then you make a little bit on there. Exactly. And there is, this forms a fair value gap here. We also get this one in here. We can see also that we've actually rebalanced this one here, which I think is the one that Hans is also alluding to, right? So you see how the confluence starts to stack up. We got our 15-minute close. That means green arrow is go time. We get the close, the very next 3-minute candle that violates this, closes above this, making it an inverse fair value gap. Price is then in a state of delivery from a bullish fair value gap below. Oh, let me just do that a bit darker. Yeah, and we can see how it comes together. Now we don't close our trade here. Yeah, remember our target's here. Yeah, so we just moved our stop loss to entry there, maybe trimmed a bit of profit. That's a 4.69 trade. That's really nice. If your risk is $100, then just $469 winner minus your fees. Yeah, and actually, let me just show this off to you guys for a minute as well. It's one of our in-house indicators built by the absolute genius Razoon. Let me find his. He's out, absolutely no doubt, just out looking at charts and everything to find setups for members at the moment. So at Razoon, one of his many talents is he made this amazing indicator. So position size manager by Razoon, yeah. One of the perks, if you are at the Nest, please do hit us up. You can get access to this indicator for free. And it's really, really good. So basically, we're just sitting here and we're looking at, right, look, line comes up. Here's our entry. Where's our stop loss below this low? Where's our target this high? Right? It then bases it on a $1,000 account, but you can double click it and change it. Risk percentage of your account that you want to allocate, 2%. Yeah, for me, I like risking no more than 2% of my account if I'm trading with the trend. Half that if I'm trading against the high time frame trend. And then it tells you everything you need to know. What's your position size? So remember, your position size for this trade is $11,582. Yeah, that means you're using 10x leverage to give you a margin of 1158. Takes it down by 10% of it. But ultimately, your fees are going to be based on the larger number, the position size. Yeah. So if you look at that and you allow, say, like 1%, you're thinking like, okay, maybe you don't pay that in fees, whatever, but it's a good number to allow. Then, and sometimes more, sometimes I allow 1.5, just because crypto, you can get that, you've got to make allowance for the funding rate, etc. So you can see here that if we allowed 1% of this, we'd be allowing like $11.58, plus our risk is 20. So our actual risk, this if we get stopped out, isn't just 20, it's 20 plus the percentage of this, depending on your funding rate and your fees and the exchange that you're trading with, which incidentally, guys, as well, reminds me just very, very quickly. Let me see if I can find it. I'll find it at the end, but it should be also in the description of the video. The link tree. We've just launched the new link tree. You can see all the partners. They're doing some insane bonuses at the moment. We partnered with Prime XBT. We're giving us up to $7,000 in joining bonuses. We've got Bybit as well. You can get up to 30k with and join the Nest for paid memberships for free using the referral deal. So do go and check that out. Obviously, it just full transparency stuff like that really helps us bring this content to you unpaid. Right, we do have paid memberships and bits and pieces as well for anybody that's interested. But check that out in the description. Like I say, it's for some people, it's not for others, right? So please just do whatever's right for you. So within this, I can now work out what my fee structure is, what my win is. So I win $90, or I stand to lose 32. So I've got an almost 3R, even though this says 4.69. I'm thinking, well, okay, I take maybe a little bit here, then I leave that runner. Brilliant. I've walked away there with a nice amount of profit. So make sure you're understanding your fee calculations, guys, right? Because it is really, really important, especially when you're talking about these low time frame trades, okay? So just to kind of end on what my thoughts are with ETH, that was a question I had earlier. I thought it would come up again. Oh, awesome, man. Really, really glad. They never hesitate to reach out, Nip. So let's get off replay mode. See what price is doing here. So on an hourly scale, right, we can also see that at the moment we're holding this fair value gap here, right? So as long as we continue to hold this, then we're delivering from a bullish array, yeah? Meaning that we're delivering from a bullish fair value gap, meaning that this becomes our most logical target as long as we hold this, right? And we want to see how this does hold. Again, looking at this, we can see how it held the equilibrium, yeah? Wicks down are fine, but the bodies have held it. That's showing that this could have a little bit of momentum higher. Yes, it can look a little bit exhausted. But then all we can do is we can just decant that lower and say, well, okay, we can see here, back to our theory, right? We've got this beautiful 5-minute bearish fair value gap here. I would be looking for a higher one because you see we've got 2 fair value gaps in here. So if we go to a 10-minute, yeah, we can see 2 there as well. So our 15-minute gives us our clearest one because it's one big fair value gap. So we get that strong close above it, then I think we're looking to attack these highs. As long as we're holding over the equilibrium, I'm a little bit more bullish than bearish. If I'm looking for it in the other way, well, how do I take that? Well, quite simply, if we're taking this and we overlay the same principles here, we say to ourselves, well, this is our bearish fair value gap below here. We're delivering from bullish fair value gap. We're delivering from this bearish fair value gap. If price comes down, yeah, and we close under here, so we get our close here, then I'd be looking for a little pullback here and for price to start attacking liquidity below these lows. All right, guys, look, I hope it's been useful for you today. I'm going to get my head in the charts and see if we've got any setups to share with members, and maybe even get a few bits and pieces out on Twitter as well if I can. I'm going to start rolling out the live trading sessions where I'll be trading New York live most days with the members inside the Discord as well. We can see here at the moment we've got price just trying to push up, but kind of finding that struggle. I'm going to sit here and wait patiently. If we get this close above, then I think we flush liquidity higher. However, I do think if we break down here, we could be looking for a corrective move a little bit lower down to here. And I'm going to be using this fair value gap in here, this bullish one. If we get that close below, we turn this purple, which shows us that that's now becoming resistance. And we look for price to find liquidity below the lows further down. All right, guys. Look, do have a great week. I think I'm going to be live with you again on Wednesday. We're going to try and get a schedule out for you all as well. We'll be live every day with a mixture of the different analysts at the Nest. So please don't hesitate. Do pop along and make the most of that. If you do want to follow me on YouTube, on Twitter, you can do so at BC_Richfield. All right. I do try and reach out to everyone as much as I can. I need to be a little bit more active on there, but we will take that and go with it. The one thing, I didn't cover this actually, and I really, really want to before we go. Now, this is something I use much more on traditional markets because it's cleaner, but it does apply to cryptocurrency as well because I know a lot of people get lost with this. So I literally just take 1 more minute of your time to tell you this because I do think that it's quite a gem. Let me just hide all of this stuff. Now, mostly on a daily and a 4-hour, right? If you want to find continuation, you want to find what price is likely to do, right? Target your highs, your swing highs and lows that are rebalancing fair value gaps, right? So, see this fair value gap here? Yeah. Here's our FVG. See, we get 1, 2, 3 candles here, yeah? So 1, 2, 3. Close of this candle confirms this as a swing high within a fair value gap, meaning it makes an intermediate term high, meaning that our expectation is for price to not go above this high. When these type of highs are violated, like here, and especially when they're closed above, they become these wonderful places of support resistance flips. Yeah. Resistance, close above, support, boom, rockets away. What else we can use that for is for our expectation of what price is about to do. Here's our third candle. So we're rebalancing a fair value gap. 1, 2, 3. Close of this candle confirms this as a swing high because it's flanked by 2 lower highs. Close of this candle, where's my expectation for price to go immediately? To the next swing low. Yeah? Now, what happens here? Another fair value gap, right? Oh, help if I use the right one. Here we go. So once again, fair value gap here. I'm going to give you this next example, right? So what happens? 1, 2, 3. So here's our swing high, yeah? So when this candle closes, where's our expectation for price to go? To chase down the lows. We've got lows here, so they overlay, which is really nice. And then ultimately, obviously, we've got this low down here as well, yeah? So then what are we looking for? Okay, so fair value gaps, just saying. Just give it something, give it a try. You don't need these to mean a lot, which is why it's so good to do it on the daily. 2 more examples for you just very, very quickly, and then I'm going to turn this into something else as well. So look, 1, 2, 3. And you're like, yeah, but did it really move down? It absolutely did. Look, it was attacking the lows between all of these, right? Fine. This isn't your best example because price didn't ultimately reach for that low. But look, 1, 2, 3. At the close of this candle, yeah, the immediate target that we're looking for is price to draw up and attack the liquidity below this daily low. Now, while that doesn't look like a lot on there, once you take the drawback onto here, if you're starting to attack that to the lows, that's 2.2%. That's a huge scalp trade, right? And then just two more things quickly. Look how effective the inverse fair value gaps are. Close above it here, violating it. What then happens? What did I say? Price goes from external liquidity to internal failed external, closes above, showing us that price is reaching for liquidity above these highs, right? And just one more, just so that you can review it again at the end if you want, and just maybe watch the last kind of 10 minutes to get this in your head, or probably less, right? Remember, bullish fair value gap, where's our swing low formed within it? 1 candle, 2 candle, 3 candle, flank. This middle candle flanked by 2 higher lows, yeah? Close of this candle, what's our expectation for price to chase down liquidity above that high? Yeah, if we look over to the left, we're not quite filling a fair value. If we were, that would have been an intermediate term high. And you can see where these key highs become these lovely support resistance flips. All right, guys, look, I hope you found that easy. I just really wanted to leave you with that. Should have thought about it earlier. I'll cover it again on next week's show as well for anybody that might have missed it. Wishing you all just an amazing week ahead. Do trade safe. Keep an eye on the news as well. For anybody that's involved in it, check out official calls later on the Bird Nest, because Jay will be doing his amazing news updates. So keep us up to date. For those of you that don't have access to that, please check something like Financial Juice, where you can find out the red folder news, which is news, Fed statements, etc., that are coming out that are expected to have impact on markets. And then we can use that as part of our overall plan for how we're looking at the markets for the week ahead. All right, guys. So look, a huge thank you to everybody. It really is always a pleasure to be on here with you guys, and it's so nice to see so many of you. I think we had over 75 people just on YouTube at one point and several hundred through Twitter. So that is really cool. And I'm going to see you guys on Wednesday. I'll be doing some internal sessions for any of you that are with the members. We're going to be doing some trading sessions probably starting tomorrow, so keep an eye on that. And as we move forward, I'm going to try and get at least one free trade session out for you guys as well, for those of you that aren't members. So look, have a fantastic week. Trade safe. If you've got any questions, please don't hesitate to reach out. I look forward to seeing you around the nest.